Okay, so no one's in? Okay.
Yeah. All right. Tuesday evening, and we are here with Kim.Majors, 10 tips to buy a home in 2024. Market is changing. Are you ready? That's a big question. Hey, Kim, how are you?
I'm good. How are you?
I'm doing well. I'm excited. I'm excited for this new year. We have new opportunities, and I think those opportunities might finally be here for our buyers. So let me just open our information here. There you go. All right, let's start this. So for everybody that doesn't know me, I'm Susanna Haney, and I've been in real estate for 13 years. And Kim and I basically grew up together in this industry. And it's a passion of ours, I think both of ours. And we love helping our buyers as well as our sellers and investors to move forward in their real estate journey. So, hey, Kim, yeah, tell us about you.
You kind of hit the nail on the head. Also been in the industry for 13 years. And yeah, I love being in the industry. Definitely love helping people. I'm a numbers person, so I like going through numbers and helping people figure out where they want to land. And I love being able to help people get into the homes that they are dreaming of living in.
And never a dull moment, right?
No, never.
Yes. All right. So let's talk. Is it a good time to buy? So on the real estate side, things have calmed down. Probably everybody's heard in the local media or also in the national media how things have slowed down in some areas. It has really decreased a lot. We had a seasonal decrease again, and what you will hear probably by the end of this week is how bad the numbers are in January. I think what I need to kind of point out is that all the January numbers are actually contracts or homes that went under contract in December. So we're definitely lagging those 30 days. So what you're actually hearing in the media are the numbers for December, because it takes usually around 30 days to close. How is January panning out so far? Well, we've had one of the lowest interest rates in the past, what, Kim, 7 months recently?
Um, no, well, actually, um, I would
You're
say
looking them
we
up, aren't
were,
you?
what?
You're looking them up right now too.
Well, no, I just had a thought because I'm actually
Oh,
working with a client right now that I literally helped almost exactly a year ago, and his
oh,
interest rate is almost identical. So I'm going to say, yeah, rates are probably, well, close to. So this was March transaction and it's January and the rate is the same. So yeah, it's probably been since about last March where we've seen rates this low.
and we had a tremendous bump. When was it? November? Was it
Yeah.
past 8? Well, what does that mean for buyers? For buyers, that means it becomes increasingly difficult to afford the interest rate. But there are strategies for buyers to still work with the interest rates as high as they seem, because sellers, they of course have less activity, and so they're even more willing to help buyers get into a house. Um, right now there is less competition of other buyers. That means, as a buyer, believe it or not, as high as interest rates are, they actually have more negotiating power. Possibility is there that the sellers provide sellers concessions. So they basically give you a lump sum of money. Yes, they do. So that you can use that money to reduce your interest rate permanently or temporarily, help you with closing costs. And we can talk about this later. Kim is such an expert at this. She will probably answer all of your questions right here. So the lower prices right now, we don't know how long they're going to last, because as soon as those interest rates start dipping, the more buyers are coming into the market. So the early bird, I feel, kind of gets the worm in this case. And yeah, being prepared is definitely one of those important things. And one of the things to be prepared is to talk to a lender. And Kim, take it.
Yeah. So yes, I feel like it's never too soon to start the conversation with the lender in the home buying process, because if you, even if you're buying a year, 6 months, 9 months, a year down the road, if you start the process now with the lender, and if you do it and you're ready to go, then it's no big deal. Then we just re-up everything a year down the road. But if you're not ready to go, then it gives us more time to strategize and make a game plan so that you are ready to go. And I think the other thing that can be really helpful in talking to a lender early is, the worst thing you want to do is probably start window shopping on homes and falling in love with homes that might be out of your price range or out of your monthly budget desire. So you might qualify for the house, but what you qualify for and where you want your monthly payment can be two completely different things. So educating yourself by talking to a lender early in the process so that you know where you want to land in terms of monthly payment. That lender can work backwards and be like, okay, here's the purchase price ranges that you want to be looking in. That way, when you start looking, you know where you need to be. It will help you, like it says on there, focus your search efforts. That's exactly right. The other thing it can teach you is it can go the opposite direction too. People in their minds might think, I've got to stay at this number, right? This is the purchase price that I want to be at. And then they realize, oh, I really, let's say it was a home for 400,000, and then they're in love with this home that's 430, and you might be surprised that you might be able to get everything that you want at a monthly payment that's not that much higher. So it can go in both directions, and it just starting with that lender and talking with them so that you can help navigate where you want to be and things that you want to do, so that when you are looking, it's not just looking aimlessly. You really know what you're wanting to do.
And I
And
think
then,
one of the things I think that we never really talk about, we always talk to a lender when you want to buy a house, but I actually think it's important to talk to your lender just to have some sort of financial awareness overall. Where are you? What is your credit score? What would give you, the best credit, the best interest rate, or even other tips, whatever has to do with finances. I would say lender and actually also real estate agents are one of those few professionals where you get free advice. And I
yeah,
think talking to a lender is the same thing. Having
that's
somebody in your
exactly right.
corner
Yeah.
that
And
helps you
don't be
along.
afraid. Like, I think a lot of people are afraid, like, oh, I don't want to be committed and I don't want to start
Yeah.
this process, or what is it going to cost? It doesn't cost anything to get started or to, get some information. You know what I mean? Like, nothing costs you anything until you're at the closing table, right? So, um, you don't need to be afraid. And I don't know how you feel, but this is how I feel. it, it- I'm here to help, right? I'm here to help in any way that I can.
Exactly.
Whether or not you end up buying or make it to the closing table, it doesn't matter. Like, you don't have to feel obligated to just start the process and see, right? That is what we are here for. And that leads into the last bullet point there, the education about various options, there are, you see a lot of people like, I'm not ready yet. I need to save up, more money for down payment. I need this high down payment, so on and so forth. That's not necessarily true. There are a lot of options out there, different paths, different loan types, different loan programs that help with down payment, programs that can help with closing costs. There are stuff out there that can maybe be eye-opening to you to see like, oh, I maybe don't have to wait. So we're here to
Yeah.
just help explore that.
Yeah. And that also is one of the signs of a really good lender when they're not just there to close a deal, but they're also there to advise you. And that's what a good professional does. All right. Partner with an experienced agent. That would be me.
Take it away, Susanna.
Like I said, I've been in this business for 13 years. I do really enjoy that. It's always changing. It's never boring, and I keep looking at the numbers. So, for example, last week we had 269 homes under contract. So we do see it picking up a little bit, but we're not quite there. What does that mean for my buyers? Personally, that's when I start reaching out saying, it's starting to pick up, whether it's seasonally or caused by interest rates. You definitely, benefit from being prepared. So if you're watching this webinar, you're one of those people that is ready to be prepared to jump in the market whenever interest rates and the perfect house kind of merge. That's when you want to buy. So as we are moving through the contracts, real estate agents don't just open houses. We move through the contract, we negotiate on your behalf, but we also help you see things in the house that we want to point out to you, show you options, point out certain things that you might want to be aware of. And that's only really something that experienced real estate agents see. When I look back, and I don't know, Kim, how it is with you, but when I look back at like my first year in real estate or even the second year and how much I didn't know compared to now, I mean, those are two different worlds.
Oh, 100%. Yeah. But
So how,
I also feel,
go
yeah,
ahead.
the more as you do progress along, I don't know how you feel this way, but the more you do know, the more it's like it keeps spiraling into thinking about more things and more things. And do it just, yeah, the more you
Oh, we
know,
can
the
do
more you're
this.
thinking about every part of the transaction. Yeah. Yeah.
And I think that's important. And somebody that actually listens to you as well and what you're looking for and then guides you according to what you as a home buyer want or need. I think that's important. Now, I will tell you, and Kim too, we will give you the options of what is possible, what is here, what is there, and then you decide which way you want to go. I mean, that is a big goal. Ooh, opportunities in new construction. So we have existing homes and we have new construction homes, whether they're to be built under contract or they are inventory homes that the builder has built and now they're trying to get rid of them. And I think that's where some of the biggest opportunities are. But Kim, tell me what you see in your industry, in the lending industry with builders.
Yeah, when you're looking at builder incentives, what you need to make sure is that the incentive is as true as you think it is. Do you know what I mean? So you need to look at the whole picture behind the incentive and make sure you're getting estimates and numbers and looking at it to be sure that, um, sometimes you might see differences of like, okay, well, here's the incentive and you're using this preferred lender, but you need to compare rates across the board of like, you want to look at rates of that preferred lender versus maybe an outside lender to make sure you know really how good that incentive is, if that makes sense. Because if the preferred lender has a rate that's, a 0.5% higher, than maybe a lender outside of the preferred realm, you need to look to see, is that incentive truly worth it? But also, it's very important to make sure that you're looking and using that incentive wisely, especially in a declining market like this. And this is just my personal opinion. You know, we don't have a perfect or declining rate environment. We don't have a perfect crystal ball. We don't know for certain that rates are going to drop, but all signs are pointing towards we do expect rates to continue to decline coming into this year. Again, don't know for sure, but all signs are leaning towards that. So if you think rates are going to continue to drop, and I know people are really caught up in high interest rates right now, and all they can think of is, I'm going to use money to get that rate lower. But what you need to be careful of is looking at how much lower that rate gets you at the cost that it takes to get that rate
Get you
lower. So
there.
if you're spending $20,000 to permanently buy down that rate, that maybe might get there in 8 months to a year to 18 months. You could use that $20,000 in a better place because you could refinance into that lower rate down the line and not lose that money. Because if you spend a large chunk of money permanently buying down your rate, you need to look at the recoupment period. The recoupment is 4 years down the line to recoup the expense of spending that money. You might want to highly consider using that money elsewhere, because if you refinance a year down the line, part of that money is just going to waste. You would never get it back. So there are really good options on how to use up builder incentives. There's, you know, temporary 2-1 buy downs, which don't, and this is something like, if anybody has questions, you can call me, we can go in detail, but it temporarily buys your interest rate down, instead of permanently buying it down with points. And the reason that's a great option, it gives you a lot more bang for your buck and the money, for looking to where that monthly payment's moving, but only for the first couple of years. But the other beauty behind a 2-1 buy down is the money doesn't go to waste. Any unused money in a 2-1 buy down account that's left over, if you refinance before before you use through it all, will come back to you. You're not going to get it back in cash, but they will deduct it from the principal balance on the mortgage. So that is a great option to look at instead of possibly a permanent rate buy down in this possible coming up declining rate market. There are
Yes.
loan types like VA loans where you can use that incentive to pay off debt. So
I
that
know.
is
Amazing.
an amazing thing to look at. That's one of the first things that I look at with a VA buyer is, what can we pay off with these, incentives and concessions? Because that's life changing, right? You're paying off high
Mhm.
interest credit cards, maybe you're paying off a car loan. Like, you look to see what you can pay off and what works in the deal. There are caps on stuff. You can't just go crazy, but there are lots of avenues that you can use incentives for. And it's just really important to make sure that you are working with that lender that is exploring all of those avenues for you so that you're finding the path that is best for you. The same path is not right for everybody. So you need to make sure you're working with somebody that finds the best path for you.
And with exactly that is my cue to let buyers know that a preferred lender is not of a builder's preferred lender is not necessarily there to give you the best deal. And it's really important that you have an agent, a real estate agent, look through some of the numbers. And then, and that's where Kim is awesome. She is looking at helping people. And we've had it more than once where Kim was looking at the numbers. She's like, oh, that's crazy. Or where she could even compete, and the builder in the end would allow her to actually help the buyer with the same incentives that were originally offered with the preferred lender. Again, the lender is not necessarily there to look out for you. They have, they usually they just want to kind of close.
Well, you have to think too, a lot of the builders, not all of them, but a lot of them don't have multiple lenders. So it's one lender and there's no
Oh,
competition
mhm.
there, right? Like there's no need to have to
Be the
compete and be
best.
competitive with your rates and stuff like
Mhm.
that, right? So
Yeah.
it's just healthy to be able to see what else is going on to make sure that you are getting the right deal and getting the best deal. And so, and that's where, like you, Susanna, that's where it's so important to work with an experienced real estate agent. And not to mention, I'm going to talk about this for new
Sorry.
builds because you don't know what it's like on your end because I'm the lender, right? So I'm the one that is sometimes working with clients that are not represented by an agent in new construction, right? Because they just walk into the builder and they just contract right then and there.
Yeah.
And I cannot express the importance of making sure you are using a realtor on your side, so a buyer's agent, helping you go in and contract on the new build and negotiate and navigate because you need that representation for you. And you know what I mean? Because the builder's representing themselves, right? You need
Yep.
somebody to represent you. It's not costing you anymore to get that home by walking in the door with a realtor. And sometimes it can work out to your advantage to get a better deal because the realtor, they can pull comps in the neighborhood. They know what is a realistic home price to buy that house for. You need that representation. And I cannot preach that enough.
And so to that end, I've had buyers say before, oh, or homeowners, oh, everything went just swimmingly with my transaction. And that happens. But when things get tough and there are disputes coming up and questions, it's good to have somebody else in your corner. So recently, I had buyers who had this beautiful home built, but there were a few things that weren't quite right. And the builder was trying to tell them that this item and this item that we thought was just really not right, that was industry standard. He kept saying that industry standard. The buyer didn't know, was it or wasn't it? And I told the builder, I said, no, it's not. Oh, how do you know? I said, because I've been in the business for 13 years. I've seen my share of new construction, and the quality that I saw with some of the things in the house wasn't what they were supposed to be. So having that extra knowledge is really important. And yeah, and like I said, if it's all good, it's great. But if it's not, oh boy, it's good to have
Yeah.
somebody else there
Yeah.
for you.
I
Um,
have had a transaction. Actually, I think I called you for advice on this possibly, but I
oh,
had a transaction a couple years ago that, yeah, it was without realtor representation, and the appraisal came in low on a
I'm
new
not
build,
quite sure.
and the
Could
appraisal
could
came in
be.
low,
Hmm.
and it was very hard because the buyers had nobody to help represent them to negotiate what was going to happen in that transaction. And the builder's there for themselves, but now who's going to help you try to figure out how do you resolve a low appraisal issue, right? And so it's
Yeah,
just you need that representation, and I can't preach that enough.
yeah, absolutely. So by accident, I fast forwarded here my slide.
No, I talked way too long about it, but I feel passionate
It's
about that.
Oh, absolutely. Same here. Same here. No, yeah, I absolutely agree with you. Um, yeah, 2024. You said that the feds are meeting next week,
Tomorrow.
and
That
they are,
announcement is tomorrow.
oh, tomorrow.
Yep.
Okay, very good. Sorry, I'm trying to get us back to our previous screen and it won't let me. So hold on. Let's do this here for a second. Um, so they're meeting tomorrow.
The announcement's tomorrow. Yep. So the
Okay, the
Fed's
announcement is
interest rate
tomorrow.
decision announcement is tomorrow afternoon.
Any gut feeling?
I mean, my gut feeling is that there's going to be no change.
Yeah.
I don't, you don't know for sure, but it's also kind of how they say it and what else they say about it. So I don't think they're going to come out with a rate drop um,
Okay.
tomorrow, but you never know. You never know what could
Yeah.
happen. I sure I sure don't think they're going to raise rates, but you know, never say never. You just have to see
Yeah.
what happens tomorrow, and it can cause a swing in either direction. And the one thing important thing to note is people watch rates and they hear the Fed, you know, talk about the Fed rates and stuff like that. Mortgage rates don't correspond directly with the Fed rate. So if they come out and say we are decreasing rates by a quarter or we are increasing rates by a quarter, it doesn't mean mortgage rates are going to be impacted that way overnight. In fact, a lot of the times, mortgage lenders are forecasting what's going on and they're already starting to bake in what they think the change is going to be. But we do indirectly correspond. So we will see a trend, but it's not like we see, if they say rates going up a quarter, we don't automatically go up a quarter overnight, if that makes sense. But it is important.
Yeah.
We do watch it, we follow it, and it does help in the trending of what's going on in the land of mortgage rates.
Yeah. Yep. And speaking of mortgage rates, so the big question really is, what are we expecting in 2024? It does translate into whether we're going to have a, fast real estate market or a slower real estate market. I've heard predictions anything between 5.75 and 7.25 for 2024. Does that sound about right?
5.75 to 7.25 in terms of rates.
For
So
2020,
going
going,
back up.
yeah, going just moving in that
Yeah,
range.
I mean, we haven't we've been more like if you're looking at conventional rates, we've been more floating in between the low sixes to mid sixes.
Hmm.
So I haven't really seen much of an approach, a hard approach up into over the sevens in a while, you know, and they can fluctuate though daily, but we've been riding more in the sixes.
Hmm.
Um, you don't know for sure, but I don't think we're going to see more increases. You know what I mean? Like we increase a little bit and then we kind of come back down, but we've been the steadiest we've been after we dropped in November. You know what I mean? We spiked up to essentially 8-ish, right at tipping 8 around, you know, October, November timeframe, and then we started coming down. Let me double check that on that. Yeah, so we kind of hit the rock bottom like early November, and then we've kind of been increasing since then. We saw pretty rapid increasing in the market, meaning decreasing rates. So we saw a pretty rapid decrease, and we've stayed moderately steady. We're kind of bouncing a little bit up and down, but pretty steady. So between that, the steadiness, and you know, the Feds have alluded to possibly, you know, up to like 3 rate drops next year. That's kind of been the feeling of what they are talking about. If it really
2024, yeah.
happens, you don't know. But I feel like there's more signs pointing towards we're going to see some improvement in rates. So I would find it hard to believe we're going to tip up into the sevens, but you never know. Are we going to drop into the fours? Probably not.
Probably
I mean,
not.
yeah, it can be so turbulent though, right? It can be so turbulent. So the one thing we do know is obviously as rates drop, we do continue, you know, the market starts to get flooded with more buyers. So that's
Hmm.
something to keep in mind. Like you know, I think we've talked about this. Like I feel like we're in that sweet spot like right now where rates have started to come down a little bit to make it a little more desirable for buyers to be back in the market, but it hasn't become this feeding frenzy yet where you are competing against others for, you know, multiple people for the same home, and homes aren't quite flying off the market. You know what I mean? People are still getting incentives. But as rates continue to drop and we see
That
more
change.
buyers coming into the market, how long is that going to last? So I feel like we're right there, and people are coming off the slow time of the holidays, and they're starting to kind of get that inkling of, okay, let's do this. Um, that's what I kind of feel like is going to happen. Of course, we don't know for sure, but
Well, we do have the seasonality in Colorado Springs with the military and so on. So no matter what the market does, the interest rates, what happens with the interest rates, we always have, usually more happening in the first 6 months than we have in the second 6 months. So that's
Yep.
for sure. Of course, that can all change if we have a ridiculous dip in interest rates or in opportunities, let's say that, or if we have a ridiculous increase like we briefly had last year. And I think one of the important things really as a buyer to know is that you need to be ready. So it's like hurry up and wait, right? Be ready to jump in and as soon as those rates go down or drop, you probably have, if it's a short stint, you probably have what, a week to find a
Yeah.
house and take advantage.
Yeah. You can't, I mean, you hit the nail on the head when you say you need to be ready, because there's so much truth to that. Like, you think like, oh, I'm going to buy a ways down the line. How many people have you had that are like, I'm still 6 months out, and then all of a sudden it's like 2 weeks later they're like, I found
Let's go.
the home.
Let's go.
This is it. And then it's like, and then you're scrambling to get ready, and it's just be prepared. Like, be prepared and get ready so that you can pull the trigger if you need to. And to think about that too is, as competition grows, if it does continue to grow, you have to you have to move faster, because that home might not be sitting on the market for 30 days like it might be now. And so you just have to be prepared.
Yeah, absolutely. So one of the options that you had mentioned earlier is a 2-1 buy down, which is a temporary buy down. You'd mentioned some advantages of actually retaining some of the money if you refinance early. Can you just briefly just talk a little bit more about that?
Yep.
Because I think that's an important factor of
Yep.
options.
So a 2-1 buy down, it's a temporary interest rate buy down. So when you hear a lender talk about points to buy down a rate, that is a permanent rate buy down. So that permanently buys your rate down. But when you pay points to buy down a rate, or a point to buy down your rate, you're not looking at a huge decrease in rate. Like, I mean, it can change daily and every loan type is different, but let's just say on average, like maybe 1 point buys your rate down 0.25%. Like, you might not see a huge change. A temporary 2-1 buy down, what it does is it temporarily well, it doesn't technically lower your interest rate, but it bases your payment for the first year off of an interest rate that is 2% less. And then the second year, the payment is based off of an interest rate that is 1% less. So what the lender does is we calculate the difference. So you have your first year payment, second year payment, third through 360, or third through 30 years. I'm talking months. We take the difference between that third year more permanent payment, and we look at the difference of, okay, so if you have this, let's say your payment is $3,000, right, at a rate of 6%. And then the first year, your payment is going to be based off of a rate that is 4%. Let's just say on average, that saves you $500 a month in your payment. Now, these numbers are not right. I'm just throwing out random numbers. But on average, you do a 2-1 buy down. On average, I see savings in the ballpark of like $500 a month for the first year. So we take that money, it costs $500 a month for the first year for that 2-1 buy down. So 500 times 12 is $6,000. Okay. Then the second year, you'd be looking at a rate reduction of 1%, or a payment that's based off of a rate that's 1% less. So that's probably going to save you on average, random number, $250 a month for that second year. So we take the 250 times 12. That's what it costs. That's $3,000. So the total cost of that 2-1 buy down to facilitate that payment is $6,000 from the first year and $3,000 from the second year. So that's going to cost you $9,000. That's how much a 2-1 buy down costs. You then
In this case,
negotiate. Yep. You then negotiate for the seller to pay the expense of the 2-1 buy down. So you go in on your offer, you ask them for $9,000 in seller paid closing costs to fund that 2-1 buy down. We put that $9,000 in an account. It's like almost like a little escrow account, but it's your 2-1 buy down account. We pull from that account every single month to subsidize your monthly payment. So your monthly payment is still $3,000 as far as the lender's concerned, right? You still owe that lender $3,000 every month, but you only have to pay $2,500. We take $500 from the 2-1 buy down account, we attach it to your $2,500 payment, and the lender is paid $3,000. Okay, so that's how a 2-1 buy down account, a 2-1 buy down works. We just keep subsidizing that payment, and it just really helps you have a lower monthly payment for the first 2 years of the mortgage. There are a couple of ideas behind the benefit of a 2-1 buy down. The first is, over time, people usually naturally make more money. You know what? They get more pay raises year over year over year. So it helps them ease into that monthly payment as they get settled into the home. So that's kind of the idea behind a 2-1 buy down, and eases you into that monthly payment. The other possible idea behind it, and again, we can't guarantee this, but you would hope that maybe you would have a refinance opportunity out of the 2-1 buy down before you hit that 3rd year payment. And then you're hoping you never get to that 3rd year payment. But you cannot totally bank on that, right? You have to be prepared to end up in that 3rd year payment for the rest of the loan if you never have a chance to refi. So
Yeah.
that is the nuts and the bolts of the 2-1 buy down. But the biggest thing to that too, and I'm going to repeat this, is you get that $9,000 that's sitting in that escrow account. Let's say you come to me at month 14, or let's make it easy, at month 12, and you're like, rates have dropped 1%. I want to refi. You still have $3,000 sitting left in that account. That's coming off your principal balance of what's owed on that mortgage. So you're not losing that money.
Yeah, and I understand we've been talking a lot about the loan process, but you need money to buy a house. And
Yep.
I think, and lenders, buyers have really needed to be more creative and search under every rock to find opportunities to purchase this house. And that's just at this point what it takes. If you have a great lender like Kim, she will guide you down the path so you don't have to remember all of this, but it's just good to have heard about it. And again, with possible, interest rates dropping this year, keeping an eye on potentially refinancing. Once you got in, of course, there are certain, periods that the lenders have that you need to have the loan in place and so on. But Kim will tell you all about that. It's, once you get there. But keeping an eye on the interest rates to have the opportunity to refinance and take advantage of this escrow account. And then on top of that, the lower interest rate. I think that's really a win-win. And yeah, I just think we cannot say it often enough how important that is to really pay attention to that. But that's what we're here for, to guide you. So one of the things that I'd really like to point out again, and Kim, you have alluded to that, when the rates drop, buyer demand will increase. I'm not sure who sees it first, but I think, you definitely get a really true feeling of the market when you see those mortgage applications come in, right?
Yeah. Yep. Yeah. And
And
I've seen an uptick for sure.
this year,
Yeah, well, actually, funny, my uptick started literally right after Christmas. So usually the week between Christmas and New Year's is like usually really slow. And I think in the lending world, I don't know how you feel in the real estate world, but I usually am very slow the week between Christmas and New Year's. But I don't, it was like a flip of a switch right after Christmas. It's just started to get really busy. So that's exactly, it's like, what comes first, the chicken or the egg? I feel like I'm starting to see it, and it's going to trickle down to buyers in the market.
yeah, absolutely. And just know the more buyers we have in the market, the then the competing offers come in. Buyers will lose the negotiation power, and, forget about having all the time in the world to make decisions. Right now, actually, we have buyers coming back a second or even a third time to think about an offer and just kind of plan it a little bit better. I mean, it could potentially go back to like a 2021 where it's like you go into a house and you kind of have to make a decision right away to make an offer. If those interest rates drop, and that was really not a good place to be. So even with higher interest rates, I think you can really save some money because you don't have to compete by
Yeah.
price or even
Yeah.
repairs.
Yeah.
So
And that's a really important thing to think about for buyers thinking about trying to time the market is, you know, rates might be a little bit higher right now. And you keep hearing me say that we anticipate rates will hopefully drop coming into this year. And people, I'm going to wait till rates drop. The one thing that you have to remember is waiting until rates drop could cause the more competition driving up home prices. So you might wait 6 months and have a lower rate, but then you might be paying 10 to
30,000, yeah.
$20,000 more for that house. And you're now not getting your closing costs covered. You're not getting some of those benefits. If you jump before the market gets crazy or gets more competitive, you possibly are getting that home at a lesser purchase price, and possibly getting closing costs covered or getting
Buy
concessions for a
down.
2-1 buy down. So you're getting these opportunities. And if rates drop 9 months down the road, then you refi into that lower rate at that time. So you had the benefit of the lesser purchase price home with getting seller concessions, and you're still going to end up at that same rate that you wanted waiting 9 months. And you know what? If rates never drop, then if rates go up, you secured the lower rate. So to
Yep.
me, it's a no lose situation, right? Like you either get the home lesser, you know what I mean? There's so many advantages to not waiting. But
Yep.
again, that is every person has a different situation.
Yep. Exactly. So creative ways. So we touched on the 2-1 buy down already. Creative ways to utilize sellers' concessions. Of course, closing cost. And I think what needs to be said is that different loan products have different limits on how much concessions, how much contribution a seller can provide to a buyer for closing cost. Um, but, of course, the rate buy downs that we have just talked about, whether they're temporary or permanent. And I think is VA the only product that allows debt to be paid off?
Yeah, for the most part.
Wow,
Yeah,
that's incredible.
there are like some banks, like we have a couple special portfolio products that you can use seller concessions to pay off debt, but not your normal secondary loans. VA is the only loan type that does allow debt payoff, and that's a huge advantage.
Yeah, yeah. And speaking of VA, so all government loans have the opportunity to be assumed. Uh, Unfortunately, that is not always a smooth process because the
Mhm.
lenders really have no incentive to really speed this along. And recently, I just learned that apparently UWM, United Wholesale Mortgage, and Mr. Cooper merged. Does that sound about right? Have you heard that? So rumor has it that some big mortgage lenders have merged and now they're sitting on 4,100 assumptions to be worked through and they haven't even been touched yet. So trying to get an assumption done within 6 months doesn't sound very realistic. And if you're ready to move forward with your life, waiting 6 months for an assumption to go through, whether you're on the buyer or on the selling side, um, is really tough. And some sellers as well as buyers will just have to bow out. I just had a seller that says, I cannot wait for 6 months, who has his just phenomenal VA mortgage with one of those mortgage
Yeah.
lenders.
The other thing to remember about assumptions too is you only get to assume the mortgage balance. Like whatever is left over on that mortgage is what you're
Yeah.
assuming. So if the
Mhm.
house is being sold for more than the assumption balance, which I'm going to say 9 times out of 10 it is,
Mhm.
you have to come up with that extra money. So usually cash down payment. So, VA loans, one of the huge benefits of a VA loan is 100% financing, right? No down payment requirement. Well, if you're assuming a VA loan that it has a mortgage balance of 300,000 and it's being sold for 375, you have to come up with that $75,000. So
Yeah.
there's lots to consider when you're looking at assumptions out there.
Yeah. And I should have said is, an assumption is basically you're taking over the loan that the seller has on their current home, which can be as low as 2.25%. I think that's the lowest that I've seen, which is
Yeah.
really sweet. And in the seller's case that I was just mentioning, that meant a $426,000 mortgage principal cost him $1,600 a month. I mean, that is just incredible. It would have been great to take over.
Yeah,
Makes me cry a little bit,
I know.
but he just can't do it. Can't do
Yeah,
6 months.
yeah.
And so that's a bummer, but that's something to keep in mind. There's a lot of talk about assumptions, but let's talk about it first. All right. Buy for the long term. Oh my goodness. Yes, yes, yes. Um, there was a time not too long ago that you could buy a house, let's say in January, and by June, you could sell the house, walk away, and actually buy it in January, sell the house in June, and actually walk away with some money after all the costs, all the commissions, everything has been deducted. And that just doesn't work anymore, especially if you've purchased in the last 18 months or so. It just doesn't happen. You need to look at your long-term strategy when it comes to real estate. When I started, the rule of thumb was you have to have your home for at least 4 years. And even then that was a little iffy. I would love to see people plan on keeping their house for 7 years. If there's an opportunity to sell earlier and not go into a short sale where they owe more than they can sell a house for, so by all means do that, but really plan on keeping this house longer. If that is not possible, if let's say you move to Colorado Springs this year and in 2 years you're going to leave, what is your plan with the house if you cannot sell it without going into a distressed situation? I think that's really something you need to think about. Maybe you are wanting to start, building your wealth with real estate. So using the current home as a investment, which is a really smart thing to do because you buy the home, stay in the home for 2 years, and then move on to the next or year and a half, buy your next house, rent this house, and just continue that on, build your real estate portfolio that way. That is a great strategy. And of course, Kim and I, we're here for you to kind of help you think through that. But I think that's so important because nothing hurts me more than having to tell a seller, yeah, if you sell it now after, let's say, 18 months, you're going to lose your shirt. You really need to keep it. And I'm a huge proponent for keeping real estate. I remember when I purchased an investment property and I was not a real estate agent yet. We were still in Washington State. And I remember so vividly, it was 2008, right before the other shoe dropped. And, the bottom fell out of the market. And when that happened, I mean, there's no way I could sell this house without losing my shirt. And I thought I just drove my family into ruin. But now, 15 years later, the house is worth double. So is the rent. And I am so glad that we did not try and sell this house. And it worked out. We had a first few rough years, but in the end, real estate investments work when they're done in for the long term. It's just like a stocks, you buy them and they go up and down, but over the long term, they just provide value and an increase in wealth. So really think about it as a long-term investment. I almost started stuttering. I'm not sure if it's because I'm so emotional about it. But that's my recommendation. Kim, what do you think?
I totally agree. It's not ideal for everybody to do this, but
Mhm.
there are options that you buy the house. Let's say you move here and you buy the house. There's nothing, there are options on the lending side. If you want to retain that house and try to buy the next house, um, there are, programs that, most loan types allow you to use rental income on your exit property to help offset the mortgage payment on that property. Like there are opportunities and options out there for you to try to retain your current home, convert it to a rental, and then buy your next property as a primary residence. There are options out there.
Yeah.
When you buy a property as a primary residence, you are firmly committing to at least a 12-month occupancy. But there's nothing to say that once you buy as a primary residence, you don't have to sell it. You know what I mean? Like years down the line, if you are moving and you want to move, you don't have to convert that to an investment property loan. You don't have to do that, but you can convert it to a rental. And that's something too where you explore those options with your lender. See if it is a possibility to keep both and still qualify for the new home. There are lots of options there. But I do agree that long-term strategy can be very, very, very beneficial in real estate.
Yeah. If nothing
And
else, it could
years
help
go
one
by
of the kids.
fast.
Huh?
Years go by so fast. You know what I mean? Like
Yeah.
we have a rental that, was my husband's first little condo right out of graduating from college that we've kept, and it's almost paid off. You know what I mean? And it's like,
There's your
that's
kids'
amazing.
college right
Yeah,
there.
that's exactly. So, you got to think about that. Like we held on to it, and the years go by so fast. Granted, that's going to age me right there saying how long I've been out of college, but um you'd be surprised of how quickly you get to that point where that asset is really helping you. And I know not every situation is the same, but you have somebody paying you rent to pay down your mortgage, and we're about to outright own it. You know what I mean? That's a
Yeah.
huge benefit.
And again, the numbers have to work.
They do.
I can help you, Kim can help you. You have to sit down and just kind of look at things. You wouldn't do anything different than what a seasoned investor would do. Sit
Yep.
down, look at all your cost, what can you rent it for, and what is it you want to do when you move on to another house. That's really what it boils down to, doing exactly that math. So asking for help, we touched on that earlier, Kim. We're here to answer your questions. And Kim said earlier, there is no obligation. We're here to help you. Would we love for you to use us? Absolutely. But in the end, there is something so human about housing. Everybody wants shelter. And to make this solely about money profit, I think is wrong. And that's where, especially Kim, I love her. She just, I mean, we're not in the business of doing everything, for nothing, but it is important for us to take care of people. That is what we're in the business for. And there is no obligation. We want you to ask us and come to us and ask us all your questions, and we can sit down and guide you down the path to a successful closing and, your happy place, right?
Yeah. Yeah, that's it. That is exactly right. We are definitely here to help, and you don't ever have to be afraid to reach out and just start the process, gather some knowledge, ask the questions. Like that's what we are here for. If you can't tell by this webinar, Susanna and I like talking about real estate
Talking.
and lending, and that's what we're here for. So anytime, don't be afraid to ask for help, ask questions. That's what we're here for.
Yep, absolutely. So what's next if you are thinking of, or you already have made up your mind that you're going to buy this year? The first steps is, schedule a consultation with one of us, both of us, and find out what might be right for you. Again, it's very individual. But even when you're not planning to buy this year or next year, if it just doesn't seem to work out, I think the knowledge that you gain and the education that you are getting from us is something that will help you to plan your future path. And then, in the end, also, we do have a buyer's guide that will assist you and where you can kind of read things up again, because we just threw so much education, so many facts at you. I think whatever you hear, you only retain 30% of that. At least that's how it is with me. And if I retain 30, that's a pretty good number. I have to actually go back and just revisit. But yeah, download our buyer guide. You have Kim's phone number here in this webinar, and we have it listed below as well. You have my contact information, and please reach out to us. And Kim, thank you so much for spending the evening with us here and
Yeah.
giving us all your input and your insights.
Thanks for having me. I appreciate it.
Absolutely, it was my pleasure. Thank you all.
Bye.
Bye.